It's about that time of day again, isn't it? Boy, that time flies when you're having fun. Hope you guys had a great week last week. We're back in the action, though. Time to get back to work. I missed you all, by the way. It feels great to be here with you guys and gals once again on our nightly newsletter. It's Monday evening, by the way. It's August the 5th, 2019. My name is Joseph, in case it's the first time you're here. And this, as always, is your nightly newsletter. Now, in case you forgot, it's been a while since I've seen you guys. Again, my name is Joseph. I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. My job tonight is to identify the best levels of support and resistance, put together the best setups, looking for the best opportunities setting up for tomorrow. That's Tuesday's trading session. And we have a lot to cover in tonight's video. We'll check the charts here tonight. We'll grab oil, S&P, Nasdaq, gold, and euro. We'll check the calendar, and we'll put the plan together for tomorrow morning's trading session. I'm going to jump in here to oil first because oil is getting all coiled up, all comfortable ahead of the weekly inventory report later on this week. Let's jump into that oil. Let's jump into that black gold because, of course, the only market that didn't go crazy today, right, was this oil market. Oil is, as you can see right now, oil is very obviously in a range, right? Market is range bound. Call this an expanding triangle, call this a rectangle. You can call it whatever you want right now. The bears are unable to retest the lows. The buyers are unable to retest those highs. I've got this as a neutral, balanced market, and anytime I have a balanced market, I know the odds are very good that every time we go up, we end up back down. We go down, we end up right back up. So my job for tomorrow is to buy low, sell high, and fade those breakouts, right? As the market goes up, I'm looking for sell setups to sell back down. As the market goes down, I'm looking for buy setups to buy back up. I'll also keep an eye out for a breakout. We'll talk about 1, 2, 3 breakouts and qualifying breakout patterns as well. But more importantly, tonight on the video tonight, we'll talk about these specific patterns and these specific levels. You can see there's a couple levels here I've got marked up. We're going to dive into a lot more detail on oil so we can buy low and sell high for a profit tomorrow in our trade room. How about the S&P? S&P getting clobbered. And of course, we came in this morning, 7:30, 8 o'clock Eastern time, and the S&P was already down 2% on the day. So we pretty much had, in case you're just tuning in here right now, had a bit of a dust up overnight between the U.S. and China. Last Friday, the U.S. imposed new tariffs. As of Sunday night, right, China comes back and says, oh, really, right? Two can play at that game, and they, of course, right, did their own ways, right, of getting back at the U.S. So tit for tat here right now, and of course, you know what they say, right? An eye for an eye, and what? Everyone goes blind, and that's exactly what's happening right now on the S&P. You can see we definitely have a bloodbath of a day today. We haven't seen a move down like this in quite a while here, right? 113 handles down. Almost 3 million contracts traded today on the S&P, a very big move lower. We're obviously bearish. There's no doubt about that. The big thing, though, is anytime I see a market making 1, 2, 3, 4 legs lower in one session, there's always one particular pattern I'm expecting for tomorrow, and that is a trading range. I'm expecting this market is eventually here tomorrow going to go sideways. So a little bit of the same strategy we can apply on oil, but we're going to kind of adapt that same strategy because in this case, it's a bear market into a trading range. I'm not too keen on being a buyer in this market right now, but I will talk about some very key select buy setups if we do get the range tomorrow as well. We'll also talk about what to look for a possible reversal, but usually in situations like this, it's going to be range-bound market the following day, and we'll put together a specific plan on how to trade that most likely a range-bound market right in tonight's video. Over on the Nasdaq is definitely not as ugly as the S&P, but as you can see, it's a very strong right bear market. Again, anytime I see a market go this far, this fast in one trading session, the following day is almost always going to be a range because nobody's going to want to dare buy this market, and nobody, of course, is going to take their profit yet, right? So the market will usually sit there and go sideways. So on the Nasdaq, you can actually see a great example though. I've got some key levels of resistance here on this Nasdaq, and I'd love to get the opportunity here to sell off those highs. Now this will be a relatively deep pullback, so we'll have to be prepared for the right entry setups to sell off this high. And of course, I'm going to dig into those setups in a lot more detail here tonight in this video. But again, expecting a range bound market tomorrow on that Nasdaq. Over on the gold here. Now gold and euro are two very important charts, so I want you to pay attention here, guys. The gold is kind of a little bit ahead of the euro, and you'll see what I mean in just a moment. What do we know about gold right now? Gold is bullish with a spike in channel. Anytime we see a spike in channel, we always want to mark up the deepest part of that pullback, and that's typically where, right, we get that buy. It's a typical spike in channel on the gold. If you're a client of mine or if you watch my nightly newsletter every evening, you've heard me talk about these buy zones, right, on spike and channel patterns. The moral of the story though is gold got that deep pullback, and now you'll notice rejection up at the high. Rejection. That is the word of the day right now here on gold, right? We're obviously bullish. The buyers get a nice deep pullback. They bought that pullback and they got rejected right at those highs. And you can easily see that big profit taking off of that high. That rejection sets up everything we need to know for tomorrow. It tells me exactly where to buy, and we'll put together some buy setups here for tomorrow. It also tells me what I need to qualify this going higher and where my next target will be. So believe it or not, that little guy right there, that little bounce off the high, pretty much tells me everything I need to formulate the plan for tomorrow, and we're going to break that down in a lot more detail tonight on this gold. And of course, last but not least here, over on the euro. Now I mentioned earlier, right, the euro is like a little bit behind gold, right? So gold, of course, had that big spike in channel up, had that deep pullback, and the retest of the high, right? So if you go back and look at gold, and we'll dig into this a lot more deeper here tonight on this video. But obviously, right, I'm looking for the same type of scenario here on the euro. Nice, big, strong pullback, right, off those highs. Get me down into this buy area. I've got a couple areas I'm watching here, right, as key levels of support, and we'll dig into that tonight on the video. So I've got 3, maybe 4 different entry patterns we can look for on that pullback, and we'll talk a lot more detail about that. If we do go sideways, we do want to be ready for that tonight as well, because again, it was a pretty big move here in today's trading session. And of course, we haven't seen rejection yet out of the euro buyers yet, so we may see this keep going higher. I do want to make sure I'm ready for that as well. So quite a bit we're going to cover here tonight. We got some euro and gold that are kind of brother and sister there. Nasdaq and the S&P, they're twinning here tonight. And then of course you got the crude oil, right? And crude, of course, all coiled up inside that sideways range here. We're going to break all of these details down and put together the best setups for Tuesday morning's trading session. But before we jump into those charts here tonight, I want to make sure you never miss another great video newsletter. And to do that, just head over to the blog here at sidewaysmarkets.com and join our mailing list. Right? You may not be aware of this, but every evening, just before I publish this video on our YouTube channel, I fire off an email out to everybody on our mailing list, and I want to make sure you get that email. That way you know when our nightly newsletter goes live. And to do it, it's very, very easy to join the mailing list. All I need is your name, your email address, and then hit that subscribe now button. And then don't forget, guys, when you subscribe to the list, your job isn't over yet. You still need to go in and check your email, because I'm going to send you a welcome email with a verification link. And don't forget, sometimes those emails get stuck in your spam filter. So if you don't see that welcome email when you join the mailing list, your job is not over. Check your email for that welcome email, because there's a lot of great value in that welcome email, along with that verification link to verify, right, that I have the right email address. If you don't see the welcome email, don't forget, check that spam folder, right? Sometimes those spam filters can wreak havoc in that welcome email. And then real quick, guys, I need a couple minutes of your time. Down in the comment section below this video, I have a question for you. If you could turn back time right now and go back to when you were first just getting started, what words of wisdom would you give to your rookie version of yourself? Right? Now you know a lot of the mistakes, right? Now you've learned a lot of the lessons. If you watch my newsletter every evening, you're an experienced pro now. But what if you could go back in time and you could look your rookie version of yourself right in the eye and say, pay attention to this, or don't waste your time on that. What was the biggest waste of time for you when you were a rookie trader? What type of advice would you give to another rookie trader that doesn't want to make those same mistakes, right? Or what would you tell your rookie version of yourself the most important thing to focus on? Drop me some comments in the comment section below. I'm always trying to make this video newsletter the very best place to learn and earn, and your comments really make my job a whole lot easier. And while you're down there in the comment section, give me some great ideas to make this video better. Give me a thumbs up on the video tonight, would you? If you tune in every evening and you watch this nightly newsletter, give me a thumbs up on the video, because you'd be amazed at how much that helps me expose this video to other traders who can definitely benefit from this knowledge as well. And don't forget, guys, I know we're on YouTube right now, but I'm actually a real person. And I love to talk to my clients. If you have any questions out there, please don't be afraid to pick up the telephone and call that toll-free phone number. I'm always here. So whether you want to shoot me an email, drop me a comment in the comment section below, use our live support tool, or pick up the phone, call me. I'm a real person, and I would love to help you answer all the important questions about charts and data and brokers, or maybe you want to learn about how to get access to our free trading classes. Call that toll-free phone number in the upper right-hand corner, and I'm here standing by to answer the call. But until then, let's get this newsletter going tonight, shall we? It is the first full week of August, right? It's kind of the second week of August. Obviously, last week was only a couple days in the month of August. So this is going to be your first full week of the month of August. And as you probably realize, right, we are starting to turn the corner here now from the summertime season into the fall season. Now, I hate to disappoint the kids. I know the kids aren't ready to go back to school yet, right? But usually that second and third week of the month of August is where the kids start getting back to school. Parents start to get all the salt water out of their ears, right? And we start to get back into the swing of things here, right? Going back to work, getting back to the markets, right? And we start seeing these markets heat up. So I know it's been a little bit slow the last week or so, right? That's why I always encourage you guys to invest time in important things to get done during the summertime months. Last week, for example, we completed a massive overhaul on the back end of our website. Be looking forward to new course videos, new psychology series coming into the end of the year, right? But be aware, this first full week of August may be a little bit slow and sluggish here, because again, right, we're kind of just towards the tail end of this summertime season. And as I look at the calendar today, you'll notice there isn't a lot of real catalysts here this week. You'll notice there's not a lot on the calendar for tomorrow. We got the inventory report on Wednesday, jobless claims on Thursday, and of course the PPI inflation number on Friday morning. So it doesn't look like there's much of a catalyst here, right? A lot of earnings reports last week. Fed was last week. Non-farm was last week. So this week's wide open. And without any major news events, we know that the big moves typically are going to be coming around that 10 o'clock block, which is what we've seen a lot of lately. So keep your eyes on that 10 o'clock shock, as we call it in our trade room. And obviously, right, we saw some of the fireworks erupting between the U.S. and China's trade war. We saw the effects of that today. I'd be lying to you if I said I wasn't keeping a very close eye and ear out for any more information coming out about these trade tensions between the U.S., right, and China. Because what sent the markets going lower today could easily send these markets for another leg lower later this week, or possibly a massive short covering rally back up to retest those highs if we start seeing a turn for the better this week. So no major news. Keep your eyes on that 10 o'clock shock, right? 10 o'clock, middle of the session. Those tend to be where you get the big meat and potato moves during these low volume, kind of uneventful weeks. Not that we're not going to have any events, but no scheduled events. And again, keep your eyes open on any new developments we hear, right, coming out of China. And obviously, I'll be with you guys in our trade room to make sure you have your eyes and ears on the right information. And speaking of trade room, let's get ready for some charts here. Let's get ready for some setups, and let's find out where our best efforts are going to be tomorrow morning. I'm going to start off tonight on crude oil. We'll go crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the mighty euro. The oil's a range-bound market. The first thing I always ask is, what type of day are we dealing with? Is this a range-bound day or is it a trending day? This is not a trending day, right? Market goes down, market goes up, market goes down, market goes up, right? Trends can't hold, buyers can't hold, sellers can't hold. This is a range-bound day. Now, as soon as I know we have a range-bound day, the first thing I do is I go looking for the actual range itself. Once I find the range, then I use that trading range to identify key levels of resistance above and key levels of support down below. Once I have my range, I know the market is balanced. In a balanced market, I want to buy low and sell high. So as the market goes lower into my buy zones below, I look for buy setups to buy back in. As the market sits inside the range, I call that the no trade zone for a reason. I want to stay away from that range. As the market tries to go higher, I'm looking to sell it now back down into that trading range. Now to do that, I use two very distinct types of patterns. Basically, I'm looking for failures. So what I'm watching for here is, if I zoom in a little bit closer on this right now, just to give you kind of the basics of this, right? As the market goes higher, I'm anticipating that buyers in the market are not going to see this as a range. They're going to think this is a trend. And those buyers in the market are going to come in and try to buy that pullback. Now again, it's not a trending environment. This is a range-bound market, which means the odds are very, very good that we end up back inside that range. The way that I like to trade range-bound markets is I like to put myself in the shoes of the rookies, wait for a breakout, wait for those uneducated, unfortunately uneducated, inexperienced traders who don't see this as a range. All they see is a trend. Let them try to buy that pullback, and once they have their buy orders in and the price starts jumping off that moving average, now I know exactly where their stops are. And knowing that this is a range-bound market and knowing that the odds are much better that we end up back inside the range, I wait for the pop-up. I wait for the buyers to try to buy the pullback off the moving average. I then place my sell order right where those stops are, and I look to sell into that buyer failure, right? Now, these are going to happen a lot in range days. You can see an example back here, right? We go up, we pull back, the buyers try to buy it. It's not a trending day. It's a range-bound day, and we're selling back down into that trading range. Same thing applies as we go lower. Market tries to go lower, the sellers try to sell off the moving average, and guess what? Buyers are waiting now to buy it back up into that trading range. So again, stay out of that middle. Look for that price now to make a run lower. Look for those sellers now to come in and try to sell off that pullback. Right? Again, there'll be a lot of rookies out there that won't understand what a range-bound market looks like. There'll be a lot of traders who aren't looking at this the right way. And of course, we know that range-bound market says, wait for those sellers. Think about now, if I was a seller, where would my stop be sitting? And I'm going to buy right into that stop loss. We call these failure patterns. And the key is, again, find the range. Use that trading range now to identify key levels of resistance and key levels of support. Now, in addition to this, I've also got a couple levels I've located. You'll notice earlier, right? If I draw a trend line off these lows, that becomes another level of support, right? If I draw a trend line off the high up here, that becomes a level of resistance. So as you can see, we're definitely adding on, but the most important thing, whenever you have a range-bound market, the most important aspect is that range itself. So what if we break out? What would a breakout look like, by the way? Right? We know that we're looking for the market to go up. I want to try to sell, right, into that pullback failure. But at what point can we safely call this a breakout? Well, I have a pattern which I call the 1, 2, 3 breakout, and it's pretty simple. The step 1 is a strong move up. Step 2, pull back to the moving average. Step 3, very important, is the break away from the moving average. That's going to be one of the most important pieces of this trading puzzle. So it takes that 1, 2, 3, right? That 1, 2, 3, that nice strong break higher. Once we get that nice strong break higher, now I know that momentum now has shifted from being a balanced market now to being in this case, a bullish trending market. Now we don't want to buy high up here, right? The last thing I want to do is go buying high up there. I want to buy low. So I'm going to mark up that high. I'm going to mark up this high, mark up that low, and this will create what I call a hidden channel. This is one of my favorite setups in a range-bound market. It's a 1, 2, 3 breakout into a hidden channel pullback. 1, 2, 3 breakout into a hidden channel pullback. Just remember that 1, 2, 3 breakout needs to happen strong. Then you can buy that pullback at the low of that channel from there. But everything else, up, buyers try to hold it. They fail, back in. They go down. Sellers try to hold it. They fail, back in. Stay away from that trading range middle. And again, 1, 2, 3 breakout, mark up that low, mark up that low, mark up the high, and now we know where that hidden channel pullback is going to be best setting up. Now, we've covered a lot here so far. Range-bound markets, finding the best levels of support and resistance, failure patterns, and breakout patterns. I'm just scratching the surface on this crude oil chart, and I have so much more that I want to share with you, such as all the details of my 3-step strategy. And to do that, I've got a great free trading course. I'll put a link up here in the upper right-hand corner. I'll also put a big red button for you right below the video tonight on our trading blog. If you want to see hundreds of examples of those failure patterns I mentioned earlier, 1, 2, 3 breakouts, and literally the entire plan for a range-bound market, grab that free trading course in the upper right-hand corner. And don't forget, when you register for the free course, I'm going to send you a verification email, so make sure you check your email inbox, including your spam filter. Now, let's keep going. We got the oil range-bound. Buy low, sell high, avoid the middle. How about some S&P here tonight? S&P, as I mentioned before, is really in a scenario where we need a little bit more information. What we know right now is we know we're bearish. 1, 2, 3, 4, pretty much 4 legs down. Now, nothing's ever guaranteed in this world, right? Nothing's ever guaranteed unless what? Death, taxes, right? The sun will rise. And usually, after we see 4 legs, the market will look like it wants to keep going lower, but it will start going sideways. Typically speaking, and of course, we could hear another round of tit for tat back and forth with the U.S. and China, and this could change tomorrow, but typically speaking, 1, 2, 3, 4 legs down, the following day is probably going to be a big range-bound market. Now, we talked about this briefly on the oil, right? Oil's a range-bound market. What do we do with a range-bound market? We buy low and we sell high. We fade the breakouts. We avoid the middle, right? But here's the difference. On the S&P and the Nasdaq too, we have a bear bias. So we have to be a little bit careful as far as being a buyer on this market, right? So what I'll do is I'm going to look for chances here right now to go up and sell it back down. But if I get the market going lower, That's where it always gets tricky, right? Because I don't know about you, but this market looked pretty darn bearish today, and I don't think you're going to have many sellers who are willing to bet on calling a bottom just yet this week. So we'll have to be careful being a buyer off of this low. Big move down here, big move lower here right now. You'll notice I lined up these lows up to that high to create that hidden channel, and a really good example there of a buyer failure pattern, just like we talked about on oil, right? That same type of buyer failure pattern works in trending days as well. And again, you can check out more examples of that in that free trading course. But again, right, all that movement now is behind us. So now we know that at some point here, there is probably going to be a range here tomorrow morning. And again, it's very difficult for me at this point. I'm kind of guessing that that's the range right there, but I mean, honestly, I'm guessing, right? I have no way of really knowing yet where that range will be. They may bounce off this low and then up off that, right? That might end up being our range like that. So it's very difficult to tell exactly where that range will be. But for now, my best advice is, and my strategy is over the next couple hours, we'll watch and see where this range kind of settles in. That's what you want to do in these situations. You don't want to try to buy this market yet, that's for sure. Okay, I don't care how far it's gone down. It can keep going down this week as long as the U.S. and China keep going back and forth like this right now, eye for an eye, and everyone goes blind. We all know that saying. So we know this market could easily go 5, 6, 7, 10 legs, right? And I'm sure once you hit the buy button, that's exactly when it will go 10 legs lower. So stay away from the buy side right now. We're not quite there yet. Settle in and find that trading range. Then, once we have our range, so let's just assume for a moment, let's just say, for example, this is our range. Okay, again, might be wider, probably not going to be narrower, might be a little wider than that though. We'll know more in the next couple hours. Now, with that trading range, there are really 4 things I'm looking for right now. I want to sell overhead. So the best way to sell this is to let the market try to go higher, let those buyers now try to buy that pullback, and sell into their failure, right? It's a failure pattern. You'll notice here I've got that trend line coming up here, right? That expanding trend line. That would be ideal, right? So it's a buyer failure pattern. Again, it's a bear market. It's a range market. So if we see the market jump up, let that moving average come over. Let those buyers try to buy into it. Now you know, and again, the buyers are not on the right side of this market, not statistically at least, right? Not when you talk about probabilities, it may keep going higher, but the probability of that right now is probably less than 10% at this point until we see some momentum going higher here. Once those buyers try, right, let them make a run for it, let them try to buy the pullback, and then we can sell right into those failures. Now, how do we buy the low of this range? That's going to be the tricky part, right? Because again, this is not a balanced market. It's definitely not a bull market. It is bearish with a capital bearish, right? It's very bearish right now. So I don't care how low it is. I don't care how far we went. We have to be very careful being a buyer on this market. And so when these types of situations happen, I call out the big guns, right? The bazooka, the best reversal pattern that I know, and that is what I call a crown reversal. Now, crown reversals are relatively simple, but I'll give you a hint. They usually take a lot longer to trigger than you think they will because they require 3 legs. 1 is a move outside the range. 2 is a second leg that makes a higher low. 3rd is a higher high with a trap low below it. Okay, so here's how the setup looks. First of all, I want to see a strong move down, right? That strong move down is going to have sellers trying to sell that pullback. Let them try to sell that pullback. Okay, do not try to sell low down. You've gone too far, it's too low, right? You already missed the easy money. The easy money was back at 8 o'clock, 9 o'clock this morning. Okay, don't fight over pennies. Don't fight over nickels and dimes. The only person that makes money on that is your broker. Okay, you missed the move. Get over it. Okay, that's the way we have to look at this for tomorrow. Now it's all about waiting for the range and playing the edges of that range. Let those sellers try to sell that pullback. When they fail to make it go lower, now we draw a trend line. And that trend line, as you know, in a bear market, a rising support trend line becomes a big bullseye now for buyers to start trying to call bottoms. Now, we're not going to call a bottom on this. We're now going to wait for those sellers here to try twice. Okay, now, when those bears now try the second time now we're watching that prior swing. And there's this sweet spot between the original low and that higher low where I'm looking for, it's a trap low, it's a two-try failure with a trap low, and really this is your best fighting chance at being a buyer off the low tomorrow morning. Right now, again, as I mentioned earlier, I'm just kind of drawing on this right now. If you want to see great examples of real examples of how we use these setups on our favorite futures markets, right, grab that free class in the upper right-hand corner and you'll learn more about it there. But this is what I call a crown reversal. It's a nested two-try failure with a little trap there at the bottom, right? The trap is the key. Because in a bear market, if you're going to be a buyer, you've got to back yourself into a corner where nobody wants to sell. Seriously, if you want to be successful calling a bottom in a bear market, you've got to be willing to buy in a place where nobody wants to sell. And that's going to be as low as you can go, right below that prior higher low. We'll talk more about the crown reversal tomorrow in the trade room, but that's the basic idea for the buy off of that low. So now we've talked about the buy side and the sell side. What's the breakout look like? The breakout's pretty easy. Now, obviously, a breakout to the upside would be a whole lot more exciting than a breakout to the downside. I'd much rather see a breakout higher right now for obvious reasons because, we went a good 115, handles down today. So a short covering rally would definitely put some sizzle, right, in this first week of August. What does the rally look like? 1, 2, 3 reversal, right? 1, 2, 3 reversal. Mark up that high, mark up that high, mark up that low. There's your sweet spot now, and we're buying that pullback. Okay, that's typically going to be your best bet for being a buyer on the breakout. Now, every once in a while, we get lucky, and we see something like this, where it literally makes a strong run up. We go one try, we get two try, and a very fast-paced trap low. Okay, this would be a little more aggressive, but if you see a very strong breakout higher, bears try once, bears try twice, trap low, that's called a two-try breakout. The key to that setup, though, is that first leg higher has to be red hot. It does. It's going to be very, very strong going higher here, right? So strong move up, one try for the bears, two try for the bears, two-try breakout, and we're up from there. Okay, going lower, same thing, right? 1, 2, 3, break down. Mark up this low here. The key here for the low for the sell side though is you've got to get through this area here, right? That's 4 legs down. So don't be surprised if we make a run lower, we chop, 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 and then right back up again. 4 legs are notorious for being very, very convincing on that move lower. So again, my strategy will be wait for it, try once, try twice, trap, and buy it back up. If it runs and keeps going, great. Let's take the next leg lower, mark up that new hidden channel, and we'll go hunting for that next sell from there. But until we see proof of that next shoe dropping below this, measured move area here, we really don't want to be selling this market because again, if you're worried about missing the move, I hate to ruin your afternoon, but you already missed it, right? So you can't justify this saying, well, I don't want to miss it. You've already missed it. If you trade short now, you are the quintessential rookie selling low. And you might make money every once in a while doing that, but you do that every single day. It's like going to Vegas and getting lucky at the slot machine every day. Eventually, the probabilities are going to come crashing down, and you're going to lose all that money. So don't get in a habit for doing that. So the S&P is a pretty simple idea here. Just make sure you're careful being a buyer here right now because, again, it is very, very bearish. And then, of course, over on the Nasdaq looks a whole lot more refreshing than the S&P does. And I say that because you can easily see how the structure now setting up, right? We have this bear market, you'll notice, obvious, right? And again, you can't justify this by saying, well, I don't want to miss the move, Joe. I better sell now, right? No. If you want to miss the move, you need to get Marty in the DeLorean and go back to this morning, right? Because you already missed the move. The good stuff's gone at this point. Now we have to wait for this market now most likely to go sideways so we can structure this trade in a safe way. Because right now, if you sell low right now, the odds of you making money like that are very, very low. Again, it may keep going lower today, but overall, you get in the habit of making those types of trades, the probabilities over time will catch up to you. So we know we're bearish. We got a big move down, 1, 2, 3, maybe 4 legs down. It's tough to tell at this point. I'm not in the business of trying to squeeze money out of 3.5 legs down. All right? Please, please, please think about that, right? We should not be in the business, right? We should not be in the business of trying to make money when we're 3.5 legs down. Okay, this is not where the easy money is. The hard money is right here, right? This is like being in the business of selling ice cream in January. Probably not the best time to be selling that product. Probably not the best time to be doing that business, right? These are those times where we've got to wait for more reliable, more dependable setups because, again, only rookies and retail traders right now are going to be fist fighting over the last few ticks, right, of this potential 4 legs down. It's going to be a hot potato down here unless, again, you know, who knows, right? We may in a couple hours from now, we may hear from China again and they may say, oh, yeah, take this. And they may hit us again and we may see another leg down. But again, typically speaking, without any, you know, catalyst coming in overnight, we want to really be careful selling low right now. So we know the market's probably going to go sideways. With that sideways range, I'm looking for that move up. I want to get those buyers to try to buy that pull back, right? Get them to buy that pull back. And then let's go selling right into that failure. Does that make sense? Right? You can also notice too, I got that trend line coming over here. That would be great if we combine that failure pattern right up off that trend line. I've also got my channel coming down overhead. Right? So now imagine now we've got this range here. And again, I'm very much making an educated guess on where that range is. The range may be a little bit higher, might be a little bit lower. But just kind of roll it with me here for a second, right? So we have our trading range. We go up. Buyers try, of course, now to buy that pullback. The buyers now are on the wrong side of this market. We, of course, want to then sell right into that failure and back down. We go from there. Or we may see this market try to make a run lower. And as it runs lower, we got that next measured move going lower here, right? That's going to be the hardest part for tomorrow is if it makes a run lower here, again, trying to make money in this area right here is going to be nearly impossible. I get it. Yeah, you can sell the breakout, but I mean, if you're going to sell the breakout there, why not sell it right there? That's the problem. It's always easy to say, well, I'm going to sell the breakout, but most breakouts are not going to succeed. It's very difficult to tell a successful breakout from a failed breakout before it happens. That's the problem. Failed breakouts look just like successful breakouts, but you don't know whether they're going to be failures or if they'll be successful breakouts. So very difficult to make money in this area here, and we got that big round number and that measured move down below. So what I'm going to look for tomorrow is I'm going to look for it to run lower and then look for that crown reversal, right? That 1 try, that 2 try, and again, make sure you see the details on this, right? Bears try once, bears try twice. It's a low, a higher low, and a trap low, right? That is really the safest place for you to be a buyer off of those lows. And again, my words of wisdom for you on that setup, it will take longer than you think it will. Right? It's some of the most common parts of reversals. Reversals oftentimes take a lot longer than we think they will. It's like turning a battleship as opposed to turning one of those race boats, right? So let it slowly try once, let it slowly try twice, get that trap, and then run back up from there. And again, looking for a breakout. We're going to have to be very careful down here. It's got to go through that. I mean, it really has to show us. It's got to go 1, 2, 3, really start running. For me to even think about selling this market right now, I'm going to have to see some real strong movement through that measured movement of 4, get that new 1, 2, 3 breakout, and go forward from there. My guess for tomorrow is this Nasdaq ends up going sideways here, like I mentioned earlier. Move lower, 1 try, 2 try, trap, and back up, right? Move higher, 1 try, 2 try, failure, right? Back down into that trading range. Now, there is a chance here that maybe it keeps bleeding lower, right? So maybe we go lower, maybe we keep bleeding lower, right? What if we keep bleeding lower, right? What if I'm wrong about this being a range? What if it keeps kind of bleeding lower? And this will obviously apply to the S&P as well. When that happens, just mark up your swings, right? I'm going to keep my eyes on that channel, obviously, and we'll look for the way to do same idea, right? Get up off the low, let the buyers here try to buy the pullback, and we'll sell into those buyer failures. That's going to be the most reliable way to do it, because again, very difficult to make money trying to scalp your way to riches at those lower lows. That'll be like musical chairs. Sometimes they'll work, sometimes they won't. What almost always works though is when the market pops up off of those lows, the buyers try to buy, right? Like we saw back here. Same thing, right? We go up, the buyers sort of buy the pullback. We know it's not a bull market, and so we're selling right into that failure. So keep your eyes on those resistance levels overhead. If it rolls lower, we're still looking for a pop to fade into that high. And again, like I said earlier, hopefully we get a reversal. 1, 2, 3 reversal. I would love to see a reversal. That'd be great, right? Back-to-back days of big moves. That'd be great. If we get that reversal, wonderful. If we don't force it. That's the big problem right now. We don't want to force it. I don't care how far the market's gone. We don't want to force this thing, because you go forcing things, right? Only person that makes money is your broker. Over to the gold now. Now, gold is a very interesting chart tonight. Lot of information, really packing a lot of information into one chart here on the gold. First of all, what do we know about gold right now? We know that gold starts off with a strong bull move up into what I would call a spike and channel. Right? That it's a strong spike higher into a channel. And what makes a spike and channel so easy to kind of identify is the channel is usually really narrow. So that narrow channel runs higher. Now, spike and channels are notorious. Go back and look at the beginning of the channel, right? So right where that channel starts, right at the beginning, typically that's where the sweet spot is for that buy. This is not just for gold. It's for pretty much every spike and channel you'll ever see, right? We see a strong move up. The market starts to kind of grind higher with this narrow channel. We mark up that channel and then pay close attention to right where that channel kind of starts, right? What I do is I mark up the base of that channel and the first pullback, and that creates my buy zone. Then I look for the buy on the pullback. Now, this pullback is oftentimes really sharp. And so what happens is sellers oftentimes confuse this with a trend reversal. So they, of course, try to sell it because they think they're going to cash a big paycheck going back down to retest the low. But in all reality, we know momentum is way too strong to be a seller at that point, and we wait to buy right into the stop losses of those counter trend sellers. Now from there, the target at this point now is to retest the high and to make a measured move. You'll notice in this example, we get that strong move up, right? There's your spike and channel. We see that pull back, we retest the high, and what do we get? We get rejected, right? We get a brick wall of profit taking, of sellers, right? Buyers come in, they say, okay, we're good, boys and girls, let's finish up, and they take their profit back at the high. Now, this is a really important piece of the puzzle, because when I see rejection off the high, I now know that there's a range here somewhere, right? I now know that this is probably going to be a big, large range. Now, in this example, it looks like there's a smaller range on here. But just so you know, in most scenarios, when we see a strong move up, we see a pullback, a retest the high, and rejection, usually that's your top and that's your bottom, and now you know exactly where you want to be buying, right, as we go back up to retest that high. So basically, it's a trending environment, that then turns into a range-bound market. And this is all because of what? It's all because of those darn bulls. They couldn't push through the high. So it's a bull market now into what should be seen by most traders as a range. Now again, I have my range, right? I had my range originally lined up like this, right? This could easily be kind of the entire range here. So this area is really the sweet spot where you want to be watching right now. I want to buy that low, and we'll talk about the specific pattern to do that in just a moment here, right? But at the same time, though, as I get more information, it looks like that's going to be our range right now. I can take that trading range, and I can also use that to factor in where that buy zone is as well. Like I mentioned earlier on the oil, once I have my range, then I can use that range to create levels of support. And again, you'll learn more about how we do that inside of that free trading course that I mentioned earlier in this video. So now we kind of know where we're at here, right? We know we have rejection. We know we're bullish. We're not bearish, that's for sure. We're definitely bullish, but now we're more like a range, right? And we know that range-bound markets buy low, sell high, and avoid the middle, right? Avoid that middle. Now, I also want to bring it up to date here too. There's a larger channel on the chart here as well. This really isn't that important, but it does kind of lend credibility to where that buy zone is. You'll notice, strong move up, pull back, higher high. Does this look familiar? That's another spike in channel, isn't it? Right. That's a spike in channel. Now, this one's still relatively premature, so we do expect there to be buyers waiting at the low of that larger channel. Now, don't worry, you don't normally need to go back that far. I personally only use 1 day of information, right? So this is not necessary, but it definitely, right? But it definitely does help. It definitely does add a little bit more credibility now to where we are right now. So we know there's this channel here as well. And so that really kind of stacks on a little bit more support on this chart. I'm also drawing what I call an expanding trend line, right? Or a negative trend line, a support trend line that could also be used, right, as a level of support. So we're really starting to put this all together here now on the gold. So there's really a couple scenarios here right now that I want to be waiting for. One is a very strong move lower. We'll talk about that in a moment. One is a modest move lower. The other is we go sideways. And of course, the other is we keep going higher here. So let's talk about this, because the one thing that is very typical about, or one thing I should say we've already seen on gold, is we get these big strong moves. So if I see a real strong move down here, all the way down to the low of that channel, what's going to happen? The bears are going to think this market turned bearish. They are. And the problem is, if we get such a strong move lower, okay, and this is where the short-term momentum comes into play. If we see a real strong move lower, all the way down to the low of this channel, all the way down to that, right, that kind of falling support trend line, if we see that much strength going lower now, what I'm now going to do is use a variation of my failure pattern. The moving average comes over, and because we have all that momentum for the bears, I'm going to let those sellers try once off the moving average. I'm not going to buy it immediately afterwards because that momentum will be too strong. Let them try once, let them try twice, and once I see those bears, and again, this is the strongest pullback, right? This is the pullback that races lower, right? It runs all the way down to that channel low. It runs all the way down to that that falling support trend line, right? This is not a modest pullback by any means. This is a red hot, sharp pullback off the high. Give those sellers one shot at the moving average, get that higher high, make them try twice. Now we can buy going back up in, right? You'll notice this is a slight variation of that failure pattern. And how do you know which pattern to use? It's all about the short-term momentum on the chart that we're trading. Now, what if we go sideways here, right? Stay out of the middle, right? Don't fiddle with your middle. Stay away from that middle. If we go sideways now what? Buy low. Let the market drop. Get that moving average over. Let those sellers try to sell off of it, and we're buying into that failure. This is a modest pullback, right? This one's not red hot to the downside, right? This is a modest pullback just below the low of that trading range. This will most likely come after we sit quietly inside that range for a bit. That's the second scenario I'm prepared for tomorrow morning. And again, if we sit inside the range, we sit on hands. Now, what if the market runs higher? As the market tries running higher, you'll notice right now, opening up in Asia, right? Big gap up. There are two possible scenarios, actually three scenarios to keep your eyes on here for gold. The first one is a strong move up, real strong, 2-try breakout. 1 try for the bears, 2 try for the bears, and we're going long after, right? 1 try, 2 try. The key is, though, on this one, it's going to be a very strong move higher, right? Very strong leg higher. Bears try once, that's profit taking. Bears try twice, those are sellers entering the market now, and we're buying into the sellers who are now fully committed. Okay, you don't want to make this mistake and buy after the first try, because the real sellers are still waiting around the corner, right? The first attempt from the bears, those are profit taking from the bulls. It's the second try, those are the real sellers getting in. You want to let them get in, let them commit, because then you know where their stops are, then you know where their pain points are, and you can buy right into their pain point for a nice easy rally higher. Or if we don't see that strong break higher, right? If we don't see this thing really take off to the upside, right? If it goes up, pulls back, and then jumps. This one doesn't require as much strength. It just has to look the part. 1, 2, 3, breakout. Mark up the high, mark up the high, mark up that low, and now we know where that hidden channel is. What is that called again? It's called a 1, 2, 3 breakout into a hidden channel combination. Right? Beautiful setup. It takes a little bit of time, but again, you can't trust it up here because of that rejection off the highs. What else could we do here? What if we sit here for a while? What if we sit here for a while? Could we call a top on this? What's the best way to call a top? Crown reversal. Higher high. Pull back. Lower high. Second try. Trap. And back in we go. Now, I'll be honest, right? The current market conditions right now, where the sky appears to be, proverbial falling right now here on gold, it's going to be aggressive to sell this market. This is one of those times where the technicals and the fundamentals are saying buy, right? Lot of concerns in the marketplace right now. Everybody calling for recession, calling for big corrections, right? A lot of fear in these markets. So just be aware. This is one of those times where you're trying to sell this market right now. Being a seller on this, you're going against technicals and you're going against fundamentals. But if we can get the market to kind of sit here for a bit, kind of settle things down a little bit, get these buyers to try once, get them to try a couple times, trap and go. We'll definitely keep our eyes open for that possible short tomorrow, but I'll tell you right now, right, it's going to be a really good setup for me to want to sell a market as red hot as these bulls here have it on the gold right now. So that's the plan here on the GC. That's the yellow metal. Now, looking at the yellow metal right now, right, kind of the future now, right, for that euro. So let's go to the euro now, right, and on that euro, what do you see? Spike and channel, right? So big, strong move up, pull back into a narrow channel. Now, obviously, we're gapping up here in Asia. Like I said, we're going to be most likely hearing some more headlines, some more whatever coming out of Asia overnight. And the markets may continue to keep moving higher here, even in the early parts of this. Again, though, if we keep going higher here, don't be surprised if it goes sideways, right? Eventually going sideways here, because nobody will trust it to keep buying high. So if we do keep going higher here, right, be aware, keep your eyes open for that range-bound market. That will be a very common occurrence, right, if this market continues to rally higher tomorrow. Bottom line, though, is right now we know we're bullish. There's my spike into my channel. I take that spike in channel. I mark up the deepest part of the pullback, the first pullback there, right? And this is now where I'm looking to be a buyer on that euro. Now, obviously, if we keep going higher here, we'll have a plan for that as well. But right now, though, what it looks like is they're going to try to make this as a higher high here. So we may want to go out and adjust that channel a bit there, right? Still same idea, right? Same idea. Get that deep pullback, get those sellers to try and fail, and then buy going back up to retest that high. So at this point, the channel may change, right? That channel may change a little bit. If we were to happen to, for example, say, draw across those highs, right, up off those lows here for whatever reason like that, right? Now that channel, and again, I don't care so much about the channel. All I care about right now is wait for that pullback, get that moving average coming over. Let those sellers try to sell into it. That's the key. Because now when I buy low like this, now I can take a small amount of risk for a relatively large amount of reward, right? I can risk small down here. I can risk small down here, right, for a much larger reward. Those are the types of trades with a lot more reliability because everyone wants those types of trades. Everyone will take that trade, right? That low risk, high reward setup. If I try taking that trade up here, I don't have that built-in profit potential now. And so now, of course, it's a much more lower reliability trade. So again, I'm basically waiting for a pullback right now here on this euro. Looking for a pullback, looking for those bears to sell off that, right off that moving average so I can buy that failure, buy that pullback setup, right, and grab that retest up of that high. And again, like I mentioned earlier, right, I'm just simply drawing the screen right now, but I've got hundreds of examples of failure patterns and pullback patterns from our favorite futures markets as part of that free trading course. Now, a couple more things you want to keep in mind here. If we do end up going sideways here, right, pull back, double top. If we go sideways, if we end up going sideways here right now, just keep in mind it's a bull market into a trading range. Okay, don't do anything foolish. Wait for that market now to go lower. Bears try once. Let them try to sell into that pullback. Again, not much changes here, right? We now know where stops are, and we're buying right into that failure. So if euro does go sideways here, I'm looking for a classic failure setup to buy off the low of that trading range. If we keep going higher, right? If we keep going higher right now, it looks like that's the case. If we keep going higher here, as we keep going higher, just keep an eye out for that new channel. It'll probably be a spiking channel again, right? Mark up that low, wait for that pullback. And again, right, it'll be that failure pattern into that pullback pattern combination for a retest of that high. So as you can see, there's very few scenarios where I would advocate for buying high, just because you can buy high once in a while, you'll make money on that. But if you make it a habit of doing that, you're going to go broke eventually, because eventually the law of large numbers, probabilities will catch up to you, just like going to Vegas and trying to get lucky at blackjack every day or at the slot machines every day. Eventually the house will win that game, right, if you keep playing long enough. So we're waiting for the pullback right now, waiting for the range-bound market to go sideways, waiting for some sort of structure we can use here on this euro, right, to keep this party rolling here for tomorrow. So guys and gals, a great video newsletter in store for you guys here tonight. Hope you guys enjoyed it. It feels great, as always, to be back here with you guys every evening on this nightly newsletter. I missed you last week, but it was definitely worth investing the time. I got the back end update on the website, now ready to go for the end of the year, which is always the best time to be a trader. Don't forget, join that free trading course right here on the website here at schooloftrade.com. If you're brand new to trading, or if you haven't yet become that consistently profitable and confident trader, make sure you grab that free trading class. That will teach you my 3-step strategy. It also includes an invite. Come out and join me as a guest in our trade room this week on your free pass. If you want to be a member, come out and join me tomorrow morning. Tomorrow morning, 8 o'clock Eastern time. Don't forget, we're in our trade room every morning with all of our clients. Come join me as a member tomorrow morning, 8 o'clock Eastern time. And you can find all the information right below my ugly mug here on the website at schooloftrade.com. So keep in touch, guys. I'll see you guys tomorrow morning, bright and early, 8 o'clock Eastern time. If not, come back and see us again tomorrow night on the next edition of this nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.